Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 6th of November 2021 and we're publishing our gold and silver weekly update for the week ending the 5th of November. Let's take a look. Gold rose $34 last week, rising from $1,784 to $1,818, having hit a high of $1,818 and a low of $1,760, a rise of 1.9% and closing above that important previously resistance and hopefully now support level of $1,800. In sterling terms, gold finished the week at £1,347. That's up £44. And in euros, it closed at €1,574. That's up €31. Silver rose 27 cents, rising from $23.92 to $24.19, having hit a high of $24.19, therefore closing at its high, like gold, and a low of $23.04, a rise of 1.1%. Some 0.8% less than gold's rise. In sterling terms, silver closed at £17.92. That's up 44 pence. And in euros, it closed at 20.95 euros. That's up 0.26 euros. The gold to silver ratio rose from 74.6 to 1 to 75.2 to 1. Bitcoin is down $856 and currently stands at $60,616. The Dow Jones closed on Friday at 36,327. That's up 203 points on the day and up 508 points on the week. The S&P 500 closed at 4,697, up 17 points on the day and up 92 points on the week. The Nasdaq Composite also closed up at 15,498. That's up 31 points on the day and up 473 points on the week. So all major US exchanges were up thanks to a relatively dovish Fed, dovish Bank of England, dovish ECB, and as we'll soon look at, Biden passing part of his infrastructure package. Brent crude closed at $82.74. That's down 86 cents on the week. And WTI crude closed at $81.27, and that is down $1.35 on the week. The dollar index stands at 94.32, and that is up 0.20 on the week, and has shown that the dollar can now hold above the 94 level for a number of days running. Now, we concluded last week's video with the following forecast. We therefore expect to see gold trading between 1725 and 1845, with 1700 and 1860 as outliers. We can see silver trading between 2250 and 2550, with $22 to $26 as outliers. And we gave ourselves a wider spread last week because of the economic data being announced. Well, although gold and silver both traded well within our predictive normal margin ranges, we were, to be fair, a little surprised at how tight the differences between their highs and lows were, especially bearing in mind how important last week was for economic data and, of course, the all-important FOMC declaration on interest rates and bond tapering. Gold held a relatively tight margin of $58 between its high of $18.18 and its low of $17.60, providing its standard variation of around the $50 mark. So $58 was no great margin. Silver traded within a range of $1.15 between its high of $24.19 and its low of $23.05. And like gold, its margin was a little different from the norm. Now this suggests to us that either the interest in gold and silver is simply subdued, or the markets are accurately pricing these metals vis-a-vis supply and demand. If you were, for example, and we urge you to do this, do a quick Google trend search on gold and silver, and it's pretty flat, especially silver. We were quite surprised. No one is typing silver in to Google these days. This seems to suggest that the public are showing limited interest, which is a shame because we have high inflation and very low interest rates, which should really be a paradise haven for gold, especially, but also for silver. Whereas if you type in crypto, and especially recently metaverse, thanks to Facebook's name change announcement, they've both risen quite considerably, and there is inherent interest. Now, with this in mind, each morning we produce daily updates expressing the reasons for the various price movements and news which could affect prices that day and that week. So please tune into these. And as we've stated all week, when the dollar value initially fell again below 94, it will go above it, and we believe it will strengthen even further, especially now having heard that the UK are keeping their rates unchanged, in spite of much media and analyst belief that they were going to raise them on Thursday. Now, this past week's economic data was broadly positive, especially the job figures, and a much stronger than expected non-farm payrolls, which came in at 531,000 jobs, compared with expectations of 450,000, and also the previous month figures were also uplifted. We pointed out on Friday morning's update that the positive ADP figures on Wednesday and improving jobless claims figures on Thursday would likely point to strong non-farm payrolls. Not a guarantee, but the trend was in. We also saw that the unemployment rate also fell to 4.6%. Had these figures ironically been announced before Wednesday's FOMC, we're confident the traders would have marked gold and silver down quite heavily prior to the announcement. But now, having come after the announcement, their effect on precious metal prices have proven at best positive and at worst non-consequential. Now, before we give our price forecasts for this coming week, let's take a look at the economic data being published in the United States, which really not that crucial if we're totally honest. On Monday, there's nothing scheduled. Tuesday, we have the NFIB Small Business Index for October and the Producer Price Index for October. That'll be worth looking at. Wednesday, weekly jobless claims, Consumer Price Index for October, core CPI for October, and federal budget for October. That's probably the most important day next week. Thursday, Veterans Day holiday, so there's no data. We wish all veterans a very happy holiday. And on Friday, we have the UMich Preliminary Consumer Sentiment Index for November and the 5-year preliminary inflation expectations for October. So this coming week, we're not really expecting much impact on prices from the declarations of this data. Now, the big news for the week, and which helped gold and silver prices rise on Friday, was of course the House passing the biggest US infrastructure package in decades, providing $550 billion of new spending on roads, bridges, public transport, and other projects. The vote was 228 in favour, 206 against, with some Democrats voting against and some Republicans voting for. And all that is now required is for President Biden to sign the thing. Now, the proposed $1.75 trillion tax and spending package was not voted on, and instead the House approved a procedural measure teeing up a vote after lawmakers return from next week's break, and the Congressional Budget Office delivers a cost analysis. This announcement not only buoyed equity markets, but also gold and silver, both of which closed at its week's high, giving us an interesting position as to what we can expect this coming week. Now, before we give our prediction, a quick look at the technicals first. Gold has passed the 1810 level, which had proven to be a relatively strong resistance level, at which point previously we saw some selling. The next level of resistance is 1835. Support is seen at 1775 and 1750 underneath. So whilst the trend appears bullish and the economic circumstances, at least short term, should act as a tailwind for gold, many analysts and traders are cautious, focusing their attention on the equity markets in the main, and a number of family offices and some of the larger banks and hedge funds looking at the crypto market, which has increased its capitalization to $2.7 trillion. Silver recovered towards the end of the week and, like gold, peaked on Friday. The general consensus of traders is that prices will vacillate between an ultimate low of $22 and a high of $25. It's agreed that should silver break above $25, its medium-term target is $28, at which point it will reach significant resistance. Short-term resistance, however, from the technicals is seen at $24.20, followed by $24.50, and support at $23.90, and then the 50-day EMA of $23.65. With the job figures being so positive, it does suggest we should see a pickup in demand for silver as an industrial metal, which should help its advance, though we're not sure what's happening in China with its announcement about buying goods early in case there are shutdowns at Christmas. So all of the building blocks are in place for stronger gold and silver prices next week and in the coming weeks, except for a strengthening US dollar and alternative asset classes proving more attractive, at least short term. So with this in mind, we expect to see gold trading between $1,760 and $1,850, with $1,735 at the lowest end and $1,875 at the highest, which we term outliers. We can see silver trading between $23.25 and $25.25, but primarily operating within that $24 area, with $22.75 and $25.50 as outliers. What are your thoughts? Please do share them. Meanwhile, thank you so much for listening. If you haven't done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.